This is very key. You need to restore the savings bank in Zimbabwe. How can Zimbabwe expect to survive when there are no savings in Zimbabwe? I noticed in the monetary policy statement that interest rates have been reduced to 20% from 130%, but savings rates are being kept at 7%. So John Part 2, like John Part 1, has absolutely no appreciation of the importance of savings. A developing country like Zimbabwe requires savings that are at least 25% of GDP. China, the world's second largest economy, has got savings that are at least 50% of GDP. The ordinary average Zimbabwean needs to be able to put money in a bank, and that money has to have a return. So you need the structural reform of the banking sector. The banking sector is making super profits. The average bank is making profits of 180 million US dollars from non-interest income. Therefore, our banking sector is structurally flawed. There has to be reform of the banking sector so that we have savings, and a bank exists to serve clients. If you open a bank account, they will follow you 3 months later and say, "Yo, there's no money in your bank account," notwithstanding that you have a problem. That is why appointing a banker as central bank to address his own problem, it's a problem, because a mosquito can never cure malaria. It doesn't happen. It won't happen. The Zimbabwean banking sector requires structural reform. It's miscued, it's misaligned, and it's not operating like a bank. It's become a predatory institution. Then, so these are short-term things around monetary policy that requires. I also think that the Banking Act, the Reserve Bank Act, needs to be amended so that the supervision of banks is carried out by a new independent board. Because the contradiction that you have at the present moment is that the Reserve Bank is the one that registers banks. It also is the one that supervises them. There must be a separation between the registration function and the supervision functions. Most countries have got what is called FSA, Financial Securities Authority. We already have a Securities Exchange Commission, SEC. I believe that in the short term, the supervision of banks should be delegated to SEC, or perhaps you create a new super regulator that combines IPEC and SEC to regulate both the securities market, the pension market, and the banking sector. But there's a weak regulatory framework in Zimbabwe, and part of the problem is that there's always incest between the central bank and the banking sector. And part of the incest comes from the fact that the chief executive of the central bank is an extra chief executive of a bank. It doesn't work, and it won't work. So the issue of regulation